Hey there, YouTube. Wanted to make another video for the day trading, keeping it simple series. No real strong plan with these, other than just when I feel inspired to demonstrate something or perhaps promote a different mindset or perspective for day trading. I'll publish something. So I've been kind of meditating on this for a couple weeks now, and I think this is a pretty good topic to share. It's a very simple one. It doesn't really require any special tools, and I think it's one of the most helpful things to my trading. It's not something that I see a lot of other YouTubers talk about when they're talking to people that are struggling or just even beginning day trading. So everybody sees the posts, 300, 3,000, 1,000% gains from a lot of these influencers. Of course, you never see the losses, hardly ever. And people see some squiggly lines on their charts. I might be guilty of showing indicators and things. And I guess that's kind of the thing, is I realized a lot of my initial videos were very technical and assumed a lot of pre-existing skill from the viewers and skill and knowledge. And so that's part of the reason I kind of want to make these videos when I feel inspired to do so, is just to kind of scale things back and ensure we have the basics covered. So this one here is incredibly basic. This might be my most basic YouTube video I'll ever make on here. And it's a very simple concept. So if you're going to try to day trading is when you take a trade within one session and you close the trade before the end of the same session. If you're going to try to trade that, I don't care if you're using the 1 minute, 5 minute chart, 15-minute chart, hour chart, doesn't matter. The concept remains the same, and that is that whatever it is you're trading, on average, only moves so much on any given day. And so if you are, let's say we're trading on this day here, and you try longing here, well, that's pretty dumb. It's pretty ignorant, because we've already moved this much. And if you could just look at these candles, you'd be able to look and see that these are all roughly the same size. And they make an indicator for this, average true range. And of course, we've had some crazy times this year, so we've had to work this down. Let's just shorten this to, like, on average 3 days. Let's keep it to a simple rolling 3-day window. Keep it to a rolling 3-day window. I would say safely we're looking at about $5 for SPY here. I know it goes over, but averages lie. So this is what we got. Maybe we do 5 days. Yeah. So long term, you can see we're oscillating a little above, a little below, flirting around with this. Okay, $5. We call it $5. That's what you can expect out of SPY on any given day. About $5. Obviously, we've got this kind of day. All right, but if we're going to be consistent, we're going to focus on consistency, trying to pull some money out of the market every day. It's a very tough thing to do consistently, not blow up. Risk the same amount, or you could be dynamic with it, which I think is better. And if you can dynamically size, I think one of the best things you could do is dynamically size based on where we're at within the context of a day. So you would not go 100% longs risk exposure here, because we've already delivered mostly $5 on the day. So looking at this, we go to smaller time frame chart. Let's say you wanted to short down here for some reason. How much has SPY already moved for the day? $2.30. If your plan is setting up to grab some kind of fancy 1-to-3 multiple that a lot of gurus are talking about online, okay, let's just say even 1-to-2. That's $1.71, and we've already moved about $3. That's just barely going to make it potentially. Obviously, it doesn't. Maybe on a different day it would. But it's a good thing to think about. And also, are you realistically going to buy, let's say, a 624 put on SPY when we're so far away from that? and it's beyond the typical movement. So what did I say, 624? Okay, we're moving about 5 points a day. That's pretty darn far. You're talking, you're trying to grab the literal bottom of the day with that put. And then obviously not every day is a trending day. Not every day just moves in one direction. Quite often it doesn't. Zigzags and V's and whatever. So on this day we got a $4 move. What we get on this day? Take a true range as the highest high and the lowest low. So it's just shy of, just a little bit over 650. Okay, we're looking at $5. And this works for anything. So maybe we get a nice dump in the open. We see retracement. Now's a good time to get short, perhaps. About halfway back up the sell-off. Okay. Got about a buck 60, buck 50. And that's the other part. So what are you looking to risk, and how much movement, and what is your reward that you're looking to get, and then how much movement would be required for that. So if you are trying to make $100 off of a SPY contract, $100, you need to see if you're doing an in the money call, how much movement, how many deltas would you need in order to make $100 on that one contract. You're not going to probably see that with a 0.1 or 0.2 delta contract unless you're grabbing the perfect move. So it's a very helpful thing to remember that the market only moves so much every day. And so you want the best chances of obtaining whatever it is you've calculated, the necessary movement. You need to ensure that you're going to even be able to reliably expect that out of the given day whenever you decide to enter based on your trade system. And so for SPY, it's about $5. If we look at ES, it should be about 10 times that. It's a 10x of SPY. So we go to our, what's the ATR? So 56 points. Okay, it's a little bit longer session, so that makes sense. All right, and another thing beginners struggle with is they see the big gains. They see the big gains. Most of them are probably fake that are posted, and they think, "Oh, I want that." I mean, who doesn't want to make like 1,000% on the day? It's unrealistic because the market doesn't provide that opportunity most of the time, as can be seen here. These candles are all, from here on, are all about the same size. I do think they shrink a little bit, but let's just say they're all about the same size. It's 100 days. It's 100 days, not quite half a year, but let's call it that. And, same thing here. I mean, here's, even during the sell-off here, I would say even most of these candles are roughly the same. That's another 90 days. So now we're almost up to 200 days, just shy of 50 days of an entire trading year, where the candles on the daily chart are all roughly the same size, except for the outlier here. So don't fall into the newbie trap of optimizing for what happens 1% of the time. You're going to rob yourself of opportunity that happens 99% of the time. So again, probably one of the most simple videos that I'll ever make. ATR, I'd shorten it up a little bit, simplify the smoothing average, just keep it to simple. And you can apply this to anything, even Tesla. Everybody loves trading Tesla, it seems like. So I'd call this about 16 points. Okay, and you can use this, of course, to see, is it on the decline? Maybe it's squeezing up a little bit, and it's not as great of an idea to assume Tesla will provide us 15 points on any given day. So maybe tighten it up a little bit. But yeah, something very simple you can do at any point right before you're getting ready to take your trade. Just measure out the highest high and the lowest low. You can hold shift on your keyboard in trading view, click on the low or the high, and drag your mouse to the other end of the range, and just make sure the adjustments or the moves are there for you. And maybe you need to scale up if you're trying to extract some certain amount, so you can dynamically adjust your your risk entry, or you can just skip the trade altogether because the probability of Tesla providing any more for the day is very low. All right, I think that sums it up. I want to keep it real simple. Try it out for the next week. Drop a comment on the video and let me know how it goes. Happy trading. Thanks for watching.